Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday, the 16th of July 2020. And yesterday we published a video entitled Trade with China, Principles versus Profit, as silver reaches $19.37. And on Tuesday, silver exceeds $19 as global economic data disappoints. Now we've placed links to both of these in the description box below. Now we're producing today's video podcast at 20:30 GMT +1, and currently we've seen both silver and gold fall back again a little today. Gold stands at just below $1,800 at $17.97, and silver is just managing to stay above $19 at $19.18. So it may be appropriate to have a look at the market figures and see exactly what has actually been happening. Well, firstly, most European markets have closed down by an average of around 0.5%. But they're still managing just to hold on to monthly gains. This follows larger falls overnight, that's last night in Asia, and as US markets near their close, most of those are down around 1% as well. So the Dow currently is down 26,000, or rather down to 26,640, which is down 229 points. The S&P 500 is down 21 points at 3,205. The Nasdaq is down 88 points at 10,462. Now the dollar index has gained slightly and is up 0.3 at 96.38. Oil prices are pretty stable, with WTI crude at $40.59 and Brent crude at $43.18. Now, we've seen some interesting US trading and economic data today, with weekly jobless claims showing a pretty solid and almost unmoving, if not perhaps slightly lower, but broadly unmoving figure of 1.3 million. Retail sales, though, was strongly up for June by 7.5%, and this also compares with a positive figure of 18.2% the previous month, although that was recovering from a very significant fall. And yesterday, industrial production for June was up 5.4% compared with 1.4% in May. So the economics, apart from jobless claims, are showing an improvement and suggest some form of economic recovery. For how long, we shall have to wait and see. But the European Central Bank announced today that it would keep its main rates unchanged, and that its bond buying in the final week of June actually fell to its lowest pace since the expansion program began, which suggests that it too has had and will be expecting some moderate improvement in economic data. Well, all of this strengthened the dollar somewhat, and of course has hit precious metal prices, albeit only slightly so far. Now, from a technical point of view, gold is testing the 10-day moving average around its current level, which has support underneath at the 50-day moving average of $1,746. So at its current level of 1797, that's roughly the 10-day moving average, and 1746 is the 50-day moving average. Resistance currently rests at $1,815. And the reason for this is that it represents the highs achieved in this month, being July. Now, there is what we call a perverse risk for gold in the market. It goes like this. As relations between the US and China deteriorates, monies actually flow into the dollar, as it is regarded as a safe haven. This is why we call the situation perverse, as most people would logically assume the opposite to happen. But whoever said economics was logical? Now, if this were to happen, of course, this could put some downward pressure on precious metal prices, though frankly we wouldn't be too concerned at this, because we're still of the opinion that over the medium term, the tailwinds will be much more powerful than the headwinds. Now, that said, though, the coronavirus figures also are rising significantly, with the US topping 1,000 deaths once again yesterday and over 71,000 new cases. This is, of course, causing equity market jitters, even when the economic news appears for the moment slightly upbeat. Now, silver, going on to that today, though down some 27 cents, has had a rather topsy-turvy day, moving between lows of $19.14 and highs of $19.48. The important point to note is that it's all above $19, which is really its first major support level. It is, of course, attempting to reach that cap we placed on it in our update last Saturday of $19.50, and was just marginally 2 cents off that cap earlier today. Now, its next support level below $19, should there be a dollar strengthening, is at $18.50. But it will take quite a strengthening of the dollar to push it down there by tomorrow at least. So we are still expecting to see silver move between this $19 and $19.50 tomorrow, though of course we may be surprised. Who knows? Under the Trump regime, almost anything can actually happen. Now, the major market influencers for tomorrow, apart from geopolitics and of course coronavirus figures, is housing starts and the flash consumer sentiment index for July. Now, just to end this podcast video on a happy note, we are sure you will be delirious to learn that some of the US largest banks are reporting healthy profits. Now, there is a surprise. This time, it's Morgan Stanley. Let's take a brief look at how Bloomberg reports it earlier today. Bloomberg article dated July 16th, 2020, updated at 3:20 p.m. GMT +1. Headline: Morgan Stanley joins Wall Street gold rush on record profit. Morgan Stanley wrapped up a week of wins for Wall Street trading desks, capitalizing on the Federal Reserve's extraordinary rescue measures with record profit. Fixed income trading revenue almost tripled, driving a 73% jump in total trading that surged past expectations, according to a statement Thursday. That spurred firm-wide revenue and earnings to all-time highs amid wild market swings caused by the coronavirus pandemic. Chief Executive Officer James Gorman said the bank was well prepared to handle the crisis. The strategy was to be ready so that when markets are very active and volatile, we would still perform very well across our whole investment banking franchise, Gorman said in a Bloomberg television interview. This was that crisis, and that's what we delivered. The gains brought the overall trading haul for the 5 biggest US investment banks to $33 billion, a windfall that helped all of them survive the brunt of the coronavirus pandemic with profits intact. And as you can see, the top US investment banks, actual percentage change, the largest change was Goldman, followed by JP Morgan, followed by Morgan Stanley, then Citigroup, and then Bank of America. As the COVID-19 outbreak intensified earlier this year, the Fed cleared the way for companies to access desperately needed cash with programs that effectively served as credit backstops, allowing markets to thaw. That, in turn, spurred demand for Wall Street's trading and underwriting services. It's clear that a lot of people did well in light of client activity, Chief Financial Officer Jonathan Pruzan said in an interview. While much of that has continued in the first few weeks of the third quarter, we would expect a reversion to a more normalized level, he said. Morgan Stanley's trading gains come at a critical juncture for the bank, which is leaning on the business to shore up earnings as it makes a bigger pivot towards managing money for others. The bank's pact to purchase E-Trade Financial Corp in February is set to be the biggest acquisition by a top US bank since the financial crisis, and a sign of Gorman doubling down on the success of his firm's Smith Barney purchase a decade ago. Fixed income trading revenue at Morgan Stanley came in at $3.03 billion, compared with the $1.81 billion analysts were predicting, based on estimates compiled by Bloomberg. Equities trading revenue rose to $2.62 billion, higher than the $2.27 billion average estimate. Morgan Stanley stock is up 2.4% since the start of the year, the best performance among the top 5 banks, and a show of resilience that kept the firm's market capitalization above that of Goldman Sachs Group Inc., a perennial rival, for much of the year. Shares of the company climbed 1.8% to $52.28. Investment bankers at the firm posted revenue of $2.05 billion on the strength of a 64% jump in underwriting revenue, as the firm took its share of the surge in new stock and debt issuance by corporate America. Wealth management revenue, which typically accounts for about half of Morgan Stanley's total, rose 6% to $4.68 billion. Yes, we knew that would cheer you up. Just goes to show that even in a crisis, banks can still make money. The unfortunate aspect, though, is that it's ultimately at the expense of the taxpayer, in the end at least. Well, that's it for now. Do share your thoughts on what you've heard today. And thank you for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. And in the last 3 or 4 days, we've published 2 videos on the Richard and Greg channel. So again, pop over there and do the same, hopefully. Until tomorrow. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.